Hi everyone, my name is Brad, vlogging the name Investing Doc. Today I'd like to talk a little bit about negotiating insurance contracts and the nightmare that it can be. So follow along with me to talk about how we're negotiating with our insurance contracts, how we've been successful, and how we haven't been successful so far. Here we go. For those on my channel who don't own your own practice, negotiating with an insurance contract, the first step is you either have to be in network with them already or you're going to be in network with the insurance contract. That means you go through contracting and credentialing. So they credential you to make sure that you have all the right criteria in terms of licensing, background, all that stuff. The contracting is them telling you how much they're going to pay you. Now, I don't know how many of y'all out there had misconceptions about contracting and credentialing before you got in network with a private insurance company, but I had a ton of them. The big one that I'd like to talk about is I always thought that private insurance pays better than Medicare. How many times have you heard, oh, that clinic or that hospital or so-and-so, they would never survive just on Medicare payments alone? I was always under the impression that Medicare was the worst payer out of all commercial plans and any available plan. Turns out I was dead wrong. I'll take a few steps back for those who don't own your own practice or are not involved in the administrative task of credentialing and contracting with insurance companies. Most insurance companies are contracted through a percentage of a Medicare fee schedule. What that means is you can go to Medicare's website, and on Medicare you can say, look up the fee schedule. And there's what's called a facility fee and a non-facility fee. Now that's beyond the scope of this talk today. However, facility price is assuming that the organization, whether it be Medicare or commercial insurance, is going to have to pay a facility for you to operate there. Now, why does this matter? They're baking in the overhead to this payment somewhere, whether it be through the facility fee or the non-facility fee. Another example of this would be when you go to a surgical center, the facility fee is going to charge you facility price, and that may be for the anesthesia drugs or whatever, X, Y, and Z. When you go to a medical practice, that is not a facility, which sounds a little bit weird, but what they're meaning is that there's no separate payment to the facility itself to cover the overhead in terms of drug, staffing cost, glove cost, whatever it may be. So the non-facility fee is saying, okay, not only are we paying you for the code, but we're also paying you for the person to answer the phones, the person that basically like running the website, like all these other things that go along with seeing that patient in a non-facility setting. CPT codes, current procedural terminology. CPT codes for short are a way to shortly tell the insurance companies exactly what procedure or service you provided and a way to get paid for those services. Much like the Dewey Decimal System, the CPT codes are broken up into sections. These sections have different ranges, as you can see above, which talk about the different types of procedures, whether it be anesthesia, surgery, pathology, radiology codes, or medicine procedures, evaluation and management. Evaluation and management are the codes where you're physically seeing a patient, you have to go through the differential and diagnose the patient. Those are basically office visits or consultant codes in and out of the hospital. The main way that these codes are used is a shorthand terminology so that when you submit a code to insurance companies, they know what to pay you for. And they can data mine that to say, okay, how many people in this zip code are getting gallbladder surgeries? And is there something weird going on? So why does Medicare matter for this kind of stuff? Well, most of our contracts are built on a credentialing and contracting rate of Medicare fee schedule, meaning that Aetna, for example, may say, okay, we're going to pay you 102% 2020 Medicare fee schedule rates. It is less common that an insurance company will give us a fee schedule one by one, but it does happen that they will pay us a certain fee schedule based on each individual code rather than a percentage of the Medicare rates. So like I said, you would think that commercial insurances would pay better than Medicare, but you're wrong. Unless you're a specialist or the demand is extremely high, you're probably going to take a contract that's worth less than the Medicare fee schedule. The hard part with this is when you're small like we are, you have to kind of know your worth. And to these insurance companies, like for example, we're going through the credentialing and contracting right now, again, with Cigna. To Cigna, they're basically telling us we're not worth anything. Even though we're currently going back to Cigna saying, hey, we have 15,000 total patient lives that we care for, and a certain percentage of those are Cigna lives, and we're exceeding the metric measures for Cigna. They came back to us and they said, you're such a small player in the market, we don't really care. Here's the rate that we're going to give you for the renegotiated rate for 2023. I got to say that I always hear these things online about insurance dropping pay rates, and I was a little bit wondering if this was over the top because so far when we've negotiated our contracts, we've always gotten a pay raise until Cigna hit me with the email. I open it up and they're giving me a $1 pay raise on one of the codes, a $6 pay raise on another code. All of the other codes, they're giving me an 8% pay cut. So on one of those codes, that dollar pay raise essentially takes me from $150 for an extremely complex visit to $151. And then the other one was like $90 to $96. Beyond that, they're giving me an 8% pay cut in the setting of record inflation. So I continue to email back and forth with their representative saying, we got to have a meeting. This is unacceptable. And of course, they're kicking the can down the line about, we're struggling financially as well. I bet they're struggling in the setting of record profits. The problem with medicine is that when you're small, you have no leverage. So our leverage with Cigna is they finally decided to talk to us when we said, screw it, cancel the contract. We're done with you guys. Cigna is 6% of our patient volume. Although we enjoy seeing our Cigna patients, we're not going to take a pay cut. Once I sent that email to them that we were going to terminate the contract and we were going to send out an email to all Cigna patients saying we were terminating, that's when I got an email back saying, no, don't do that. Let's actually have a meeting about what we can do about this. And honestly, I think it just screws patients over in the middle. In other jobs, you can, let's say in the tech company, you can job hop for better pay. You can move from Amazon to Facebook and you can potentially job hop very quickly to get a boost in pay. And here, I can't really do that. Getting in network with an insurance company takes sometimes 3 to 9 months to do. The whole system's broken, and unfortunately, we're emailing our Cigna patients saying, hey, sorry, but your insurance company in the setting of record inflation wants to give us a freaking 8% pay cut. There's nothing I can do. I can't lose money on seeing Cigna patients. I have to keep the lights on somehow. As you can see behind me, there's no yacht back there that I'm trying to pay for. So how have we been successful? The majority of other insurance companies have been reasonable. We've been able to tell them this is our metrics, our patient volume. They've actually given us a reasonable pay rates. One insurance company gave us like a 25% pay raise. That was pretty awesome, but it also wasn't because the initial contract was so bad that 25% was still not amazing. So I think, where does this leave me in terms of how I feel about the future of medicine in terms of single payer, non-single payer? Honestly, I feel jaded by the whole thing. It gives me the feeling that you either need to get bought out, you either need to grow extremely large, or you need to go concierge or some sort of hybrid practice to make it work long term. And I think that's why a lot of the docs that have been practicing for years have been screaming this for a long time. I also hate how everything has to be confusing. It takes multiple different emails and sometimes can take up to a week to get a reply from an email from one of these representatives on these negotiation tactics. All this is meant to stall things, to make it very complicated, and you just can't help but wonder if there's a better system. There seems like there has to be a better system out there. Now, I'm not advocating necessarily for single payer across the board, but at the same time, wasting all these hours on our side and their side with negotiations, someone smarter than me has to come up with a system where this is not going to put patients in between physicians and the insurance companies, and both people can walk away at least somewhat satisfied. But an 8% pay cut in the setting of record inflation, that is just absolutely absurd. If I offered an 8% pay cut to my employees, they'd probably all quit tomorrow. So we're doing the exact same thing. We told Cigna, screw it, we're quitting. We have no intention of getting bought out, but at the same time, you can't help but look at this and say, okay, well, if we're not getting bought out, then we have to grow as big as we can, which will be coming in the future. And then that also means cash pay services, which I'll talk about in a future visit as how we're now doing these annual executive wellnesses that are paying $600 an hour. So stay tuned for that. Hope you guys enjoyed the video. I'll see you guys next week. Have a good one.